Good day. Ira Epstein of Linn Associates with your financial market wrap-up for this Tuesday, and we're at April 6, 2021, time about 5:15 in the afternoon. I'm a bit earlier than my 7 o'clock time. Well, as you can see, the stock market up, but it was a down day. Now, what did I say to you yesterday? Strong up days on a Monday often result in the market trying to give back some part of that on a Tuesday. Again, Stock Traders Almanac, Yale Hirsch. I met Yale. Very interesting. He got me, actually. It was those type of thoughts that introduced me to the More Research Center, where they do commodity trades that are based on historical patterns as well. So I look at those. Do I use a historical pattern to trade from? Might be a question that you should ask me. And you'll be able to ask that when I do my What's Up apps. Now, what do I mean by that? In about a week or so, I'm going to begin where I invite you to come in probably around 12:30 in the afternoon or so. It's my guess right now. And we'll have a 15-minute session where you can ask any questions you want, bring the chart symbols you want. I'll do my best to bring up the chart, answer your questions, and move right on to the next one. Sort of the rapid fire, sort of like Kramer does. You know, I think he's great at what he does. I don't know how somebody can do everything he does, but he does it. In any case, you're up in the Dow in the early evening. Currency markets, what we saw today was the dollar sink again at the expense of interest rates. So we've gone from roughly in the 10-year note from the 177 level back to the 165. It's okay. You could even crack 1.6. Who cares? I think the market's caught between roughly now the 1.50, 1.5, 1.75. If you ratchet it up, maybe you get to the 1.6 level, to the 1.8 level, 1.7 level, to the 1.9. That's what I think is going to happen longer term on interest rates. So each time you go, don't get excited. The market gets used to the number. But each time you're going to crack a new level, the market will react to it, is what I think will happen. So you'll go 1.8, oh, all the naysayers will come out. Then they'll be used to it in 48 hours. Crazy, but that's the way that I think it'll work. If you take a look at the energy markets, that market's still very much focused on what we're going to see today on the API, which came out with the reduction in the crude of about 2.6 million barrels. They're going to look to see how well OPEC is doing, and OPEC has done a good job. We're already seeing that the big oil companies are thanking. Yeah, I was watching Bloomberg today on it. They're thanking the Saudis and how OPEC has held prices together. And if you look at it, folks, that's due to them. They've held that together. Through the pandemic and all, Mother Nature and natural forces will take over soon and probably be bullish. As you look at the S&P 500, what can you say? The market is up 1.4% for the month. It's acting really well. It's got upside bias. You can see how the market broke out to the upside here. Remember, yesterday I told you, go back on your chart. Take from that point to there. What's the difference? Flip it over and look where the market's gone to. You'll see. When you take a look at where you're at right now, the trend is up. Higher lows, higher highs. Okay. You can see the supports, the 18-day average. And the neat part about this is now this number's over the last break low nicely. So the market can afford breaks and still stay with a nice upside bias because you've got enough cushion there and it's chasing the market. As for the market staying over the upper Bollinger Band. So today you did stay over it. Now you did close down 3.75 points, but that still was on a close over the upper Bollinger Band. You were over it the day before, and the day before you were over it. So what do I think of that? Well, that's 3 days in a row. The odds of you getting fourth give you a 2% chance for it tomorrow. So I say there's a 98% chance the market will try to stay to the right-hand side of that. Am I bearish or bullish? When you have an embedded reading on one thing, and that's called bullish, you've got both numbers over 90, but let's throw out today. Let's go to Tuesday's numbers. Both over 80, both over 80, and both over 80. We're fully embedded. That's what embedding means. You converted the market from being overbought to locking in a trend. That trend ends when the red line closes under 79. Until then, it's in place, and I think the pros will be buying the first pullbacks in the market here that they can, as long as you don't take out this highs first up there. I don't think they'll want to buy a reversal is all that I'm saying. In the NASDAQ, not the same. overbought market in an uptrend. Certainly, you consolidated after hitting these highs, pulled back when you look at it, and I think we were talking about that here. I also was talking to you about the fact that you were running into stiff support way back like this, and if you go back and you look at the videos, I was saying, I don't see anything that's bearish, but there's no reason to be bullish yet. And that was the reality. This is where the bullishness set in. You set up the higher lows, higher highs. Now, until you take out that number, a potential target could be the upper Bollinger Band. You went there and you're getting a little bit rich in it. Okay, so you've got 2-3 days over it. I look for it to spill over to the right. In the Dow, fully embedded reading. I expected a pause at the first challenge of the upper Bollinger Band. By the way, this is all part of that enhanced Bollinger Band course that I have. You'll never get from me in this what's in the course. So if you think I'm going to slip and say something, it's not that it's a secret. It's the way that the course builds it for you and what you get to see. 13 chapters that do it. If it was this simple to do it in 3 to 5 minutes, why did I do 13 chapters? To waste time? It costs me the same money whether you listen to 3 minutes or 13 if we're hosting it on the website. It doesn't really matter to us. That's the resistance point. Okay, I get it. Russell, not the same world. In the Russell, you haven't even made a challenge back up here. You're just at the point where you're trying to turn the market and keep it into the bull camp. The battleground's going to be the 18-day average. The problem is, anyone that's buying it here, if you want to put a stop under a previous low, it's way back here. You got a 100-point risk. I don't think you're attracting a lot of people to that risk. The chart is bullish, but I don't think you're attracting people to it. Then we get over to the VIX cash, and as I told you, I thought the first challenge of a lower Bollinger Band would result in the pros selling puts looking for the 18-day average of closes. We'll see. I'm not right or wrong yet. We'll see what their level of pain is. But if you get a break in the stocks at all, I'd be looking for that to be the cap area at 1980. In the bond market, a correction has set in. So this long decline that we had from the first of the year, literally from January, where we came down, ended. It ended when you crossed right here, that low. That was pretty much it. It broke the pattern of consistent lower highs and pretty much lower lows. The lower lows weren't always there. The highs were, and you broke it. Then you came down, and now you're in the fight where? Narrow Bollinger Bands fighting right through here. So is the next move up, down? Well, the market needs to consolidate to tell us. My instincts are it's down on the longer term charts, but the daily charts are up. I always look at what they're both doing, and they are definitely fighting each other. In the 10-year note, you're void of trend. You got a lower low, higher high. I think you're in the process of just setting up some of that sideways action here. We'll see what goes on. In the dollar index, okay, let's step back to yesterday. You lose the embedded reading. I'll show you this. The day before you didn't. When you lose that reading, unless you get it back right away, that means both numbers, watch this, both numbers would get back over 80 right away. And that's not what happened today at all. If it doesn't happen, my target is the closest of the main moving averages. So the first one is the 200-day, and then if it can go further, I'll look for the 18. If it doesn't get it back. If the pros sell it, I'll think they'd have a stop over that high, and all they're looking for is that number. It happened today. It doesn't have to happen that fast. Often it doesn't, and it gives you a chance to take advantage of a bounce in that market. Didn't occur this time. Okay. Am I bullish or bearish? Right now I'm bearish. Why? Lower highs, lower lows, momentum down. We'll see where the market goes. We'll see if it has any legs, as we call it, to the downside. Euro. Well, it's a mirror image, just a reverse. So here's your embedded reading. You lose the embedded reading. So there's some plays here. If you want to be a wise guy, you're stepping in when the market reopens. If it doesn't get it back right away, your stop's there and you're looking for the 18-day average. You got to it. Again, now the trend is up. But remember, if you bought it here, you're going to be risking $1,200. You got a 100-point risk, a full penny in that. Oh, that's a lot of money. In the British pound, the market's in an uptrend fighting at the 18-day average, but again, the risk is so large that you haven't, on this chart pattern, I think, attracted a lot of people. 138.28, and you'd have to risk under 137.09. I have if you take my charting course, not my Bollinger Band course, I teach you dollar tolerances that I've learned over the year, not that ones I can handle, ones I've gone back and with computers over years ago, I don't even have the records of it anymore, tried to find out how much tolerance should you take before you call uncle. Because I have clients that are super rich, I have clients that aren't that rich, all right? But why does that matter? Wrong is wrong. So I did a study and I use it in what I came up with. Did this all when I was writing a book, The Psychology of Smart Money. It's still out there on the internet. The Psychology of Smart Money. I need one. That's why I come up with that call your psychiatrist trade. Higher lows, higher highs in Bitcoin, battleground 18-day average. If you take out 58,455, you could actually get a small wave to the downside. You're overbought. Overbought, I don't think is going to attract any traders to it. In the differential between Brent and WTI crude, narrowing in, you could be headed back to that 18-day average. As long as you're over that number, you still have a preference more along the Brent than the WTI. And in the Brent, as you can see, you've got one of these patterns of higher lows, higher highs, but you're under the 18-day average, so the bias is down. The two fully wash each other out. You have nothing. And in terms of momentum, you're sort of drifting at the 31 level. That doesn't tell me a story either. I have the same dilemma here? No, not at all. WTI is bearish. Lower highs, lower lows. To negate the bearishness, you've got to take this number out right here, 61.75. If you take that out, that could negate it. You wouldn't be bullish on this current pattern that we have tonight. Things could change if you had big outside days and things like that, but right now, that would just give you, if you took it out, a higher high and a lower low. Do I think you're attracting selling? Not when you have a Bollinger Band that's under 30. I'm sorry, slow stochastic under 30, so no. Then we get to the rebob. Do you see the battleground? The 18-day moving average of closes is what I call the line in the sand. And for moving average people, they like a reference point. Do you ever wonder why moving averages are so popular? They're reference points. They're generally not forward-looking. They're generally backward-looking, which means as the market comes to them, they're a resistance point that formed a while ago. If it were up and coming down, that's a potential support point when it first makes an attack of it. This is the way to think about it. So you come there. All right, you can slip slide through, but you're probably going back to fight at it. And that's the norm. Okay, so you leave a trend, you wipe the people out that were in the trend, or those that go, oh, I should have been out and blah, blah. You know the story. You've been there. I've been there. We've all been around that type of horn, if you will. So you put it together and you're trying to find things that'll work. I want you to take a look right after this at the short ad that I've created for you, because I'm going to show you things in, I don't know, in the neighborhood of 2 hours. There are 13 chapters, each about 7 minutes long, about Bollinger Bands that I don't think you've ever seen. And I think they're going to give you, I don't care what you think you know, I think I'll take you to the next level. If not, I'm so sorry. I'm Ira Epstein. You have a good day. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, If you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.